Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's continue discussion the euro currency that we have started yesterday. So as you can see right now in the overall situation on the markets, geopolitical tensions take the backseat, and right now attention of the investors turning back to the economical and fundamental data. So dollar has got some support yesterday on the positive data that have been released not only yesterday but on the Monday as well. And as a result, you can see on the daily chart, market has formed the high wave pattern. So high wave pattern is very nice pattern that consists just of one candle. This is a small body with the long tails in the upside and to the downside. Tails should be approximately equal. And personally, I like the high waves because many investors pay really not sufficient attention to this pattern. They are watching for engulfing patterns, some morning, evening stars, and some reversal patterns. But high wave is very important. Why? Because first of all, it indicates indecision. So when market reaches some level and forms the high wave, it means that it's no final decision has been made on the direction. But the most important feature of the high wave is the direction of the breakout. So if market will take it out of this top, it means that our upward direction will continue, and it will be with a very high probability it will be a real breakout of this triangle. Breaking to the downside, taking out of the lows of the high wave will tell that downward action will continue. It's very important. So you could see it on the market very often. For example, here it's high wave. Market has broken the low body and downward action has continued. So it's a lot of examples here exist on how high wave could help you in such a situation. Right now, we should keep an eye on the extreme points and on the patterns that now is forming on the intraday charts. And from that standpoint, situation on euro currency is very interesting. First of all, take a look at the 4-hour time frame chart. On the 4-hour time frame, we have our ABCD in progress, as we have specified recently. The OP target stands approximately 2480, slightly higher than this top. And as breakout will happen, probably market will continue to OP. Now, all bets to say yes, the market has reached a COP minor extension. It's 2410. Now it has shown nice pullback down right to the confidence support. 2337 is confidence support. For the bullish market, guys, this retracement is sufficient for respect of just a COP target. Here we also have the 618 resistance of this move down, but it already has been tested once here. It was also an agreement and has triggered the downside action. Now it was challenged second time. That's why this 618 and it has burst really deeply. So this spike stands above the 618 resistance, and that's why this level, I think, is not really very important right now. Speaking about the COP target, this retracement, guys, is sufficient to make the respect on the COP, because reaction on the COP targets usually really light, because it's minor target. Very often market passes through the COPs as it no exists, so it very often happens. If even market shows the respect to COP, it usually moderate or small. The deep retracement after the COP tells about market weakness. That's why, although here we could talk about, for example, this pattern, so theoretically it is possible, right? It's kind of the guardian steeple to buy. It is possible theoretically, but taking into consideration all environment, existence of the high wave pattern, and the moment that this is just the COP target, major retracement already has happened here. This is actual extension mode. This is CD leg. In a normal bullish market, forming of that pattern will be not quite good sign for the bulls. It will be very deep retracement, and high wave pattern will be broken to the downside. In this case, market will break the confidence support. This also will not good. That's why, taking it all in consideration, I would suggest that the upward continuation here looks more probable. Otherwise, drop right here will be warning sign, so it's not very good. It means that on the hourly chart we could keep an eye on this pattern. So it looks a bit steep, but it's really interesting and it's difficult to recognize it very fast. It's a bit stands under disguise of this just choppy action, its steepness, and it's very difficult to say that it really could be reverse head shoulders. But in reality, take a look. Indeed, you could recognize it. So you can see this is the could become left shoulder. The head stands at 127. This is also the butterfly here. You can see right at the forming of the left arm. Here is also minor butterfly has been formed yesterday, and that drop stands, you can see, in agreement with the bottom of the left arm. It's very harmonic here. That's why I do not exclude the chance, guys, that market indeed could fluctuate here. Maybe some minor Gartner's T+2 buy will be formed based on this leg, not of the whole pattern, as we have talked about on the follow time frame chart, not this one, but only on that leg. So keep an eye on this possibility. As a result, market could form, for example, here the butterfly up, so lead market to the targets. It shows the breakout of these head and shoulders. That's what we need to keep an eye on right now. So that being said, just a conclusion. This is minor target. Major retracement already has happened here. Based on the market mechanics, the V-shaped retracement here, right to the confidence from the bullish point of view, if market indeed stands bullish, is sufficient to respect the minor COP target. It means that from that standpoint, market should continue move higher to the next destination point. If this will not happen, market indeed could form kind of the ABC retracement down, form the Gartner's T+2 buy, but this scenario will be weaker and keeps worse perspectives for the bulls compared to the first scenario. Speaking about the first scenario, we should keep an eye on these head and shoulders and watch for some bullish patterns on this swing. So, for example, if market will form Gartner's T+2 buy, some ABCD retracement here, that will let you to maybe take the long position against these lows. Your stop will be very close. If somehow will happen that market will break these lows, loss will be minimal. But you will do know that market is coming lower and probably these head and shoulders will be erased. So that's the scenario that we could keep an eye on right now on the euro currency.